It is May, and this is our monthly video to talk about some of the things that we're noticing in common from our clients' questions throughout the previous month. So the big question that I've been getting, and I know you have too, is that, Gib, I find myself with an additional X amount of dollars because we haven't spent nearly as much as we did in previous years because of COVID, or there's been an inheritance, or CDs have come due and they just can't push the button on a CD that's going to be paying what they're offering on a 6-month or year basis. The question is, what do I do with that money?
What do you do with it? Well, always, whether it's new money or old money that you're investing with us, we want to work through, first of all, the risk. What risk and what's the purpose of the money? Is it short term? Is it investable? Is it long term? Is it performance? Is it growth? Is it income? If it went down, could you tolerate it going down? What are all the issues that we need to know about this money? So we first got to know that, and we'll assume we know all that.
All right, and in many of the cases that we've been fortunate enough to have with these instances, we've looked at some dividend-producing types of investments. Because you can have an offset if the market were to drop 3% in the course of a short period of time. And lo and behold, that's what's happened over the last 10 days.
I had a prime example of a client that wanted to set aside some money for the next couple of years for grandchildren and potentially for buying another property.
Right.
And so being conservative but being growth-oriented was an objective. Now, obviously, we could buy CDs and get nothing. We could leave it in cash and get nothing. But we talked about the bonds and where bonds are at this point in time, and with inflation and concern of there, again, inflation and interest rates go up, bond values are coming down. So we actually built a portfolio with high quality, dividend-paying equities,
right,
of names that you would feel confident would be here now and would be here 5 years from now.
That's right. And it doesn't necessarily have to be a utility type of stock investment. It can be one that has a little bit of growth orientation to it and dividends. And we've been able to thread the needle with several. And these are some companies that you know very well and you would feel, as you just said, comfortable owning for the purpose of as an alternative to just putting it into cash.
And it's interesting you say that because, as a matter of fact, just yesterday in another situation I'm working with, we looked at the material space because of the infrastructure going on. And we went in there and we looked at dividend-paying positions in the material space and then looked at strengths of companies that would fall in that category, right, and built in the material space a dividend-paying portfolio with names of companies that everybody feels secure about, and knowing that, okay, it is stock, it can go up or down, but here are names of companies that we feel really good about. So we even were able, as you pointed out, to thread that needle and get that blend and get that growth with it.
Right. So if you find yourself in that position, give us a call. We'll be happy to take a look at it and go through the filtering process that you mentioned earlier in this segment, and that is, what are you trying to do? What's the longevity of this money? When are you going to need it again, if at all? What happens if it goes down 10% in a short period of time? Just all of those types of questions, and then we'll be able to select something that fits what your needs are.
All right. If we can help you, please give us a call. But always remember, it is your money.
And your money matters. Happy May.
We'll see you next month.